Guys, we have a lot to discuss today. Bitcoin above $81,000, and we're gonna talk about what's gonna happen next. Now, I know I didn't upload yesterday. I was so shocked that Bitcoin went above 81. I just fell asleep, but we'll do the video now. Don't worry about it. So first of all, Bitcoin is of course going above $81,000 right now. In the last videos, we always discussed that we are right now at crucial resistance at the top of our bear flag pattern here. Last time, we also had a bear flag pattern and then Bitcoin eventually broke down. And I still expect the same thing to happen. Just because Bitcoin goes up now, I'm not gonna change my mind. Don't worry, we're gonna stick to what I believe will happen. So I also discussed last time that the price target or the first price target for Bitcoin to hit is of course the previous low of the previous bear flag at $81,000, which we have now successfully passed. And it looks almost like we're breaking out of the bear flag pattern. We have to see what's gonna happen tomorrow and the day after. But right now, we're not gonna change anything. We're gonna stick to our strategy. Okay, so Bitcoin above $81,000. Also, if we go down on the shorter time frames, we can see that Bitcoin has tremendously gone up right here. The chart doesn't load, so let me go to the next one. Next thing to talk is, of course, Trump. Trump has announced that the Project Freedom will be paused. And this is, of course, the project whereby they are attacking Iran, right? And this being paused right now is good for the markets. And we can see that, of course, with Bitcoin right now and Bitcoin pumping tremendously. Now, I want to talk about Bitcoin and its seasonality. But before we do that, let me talk about what I did. I actually opened a short position, and I know I usually don't do this, but I opened a low leverage short position, and this is a good time to do this right now. Of course, us being at crucial resistance here. And let me talk into what is my plan. Well, so let me discuss the short position here. If we go to Bitcoin on Binance, this is the positions that I opened, okay? First one, short position at $81,000, which I opened already. And then I have basically four positions that I'm going to be opening all the way up to $84,000, right? One that's $82,000, 83, 84. We'll see how high we go. If we do not reach the fourth one, I am happy with that. I have already this one open at $81,000, and the plan is basically to ride this position down towards the bottom, towards, for the next couple of months as we then create lower highs. So why $84,000? Well, we have a CME gap. That's very important to note. We have a CME gap here from the 30th of January that was open over this weekend at $84,000. We know that 85% of the time these CME gaps tend to be filled. And I personally, now that we have hit $81,000, expect Bitcoin to fill that CME gap. We know that Bitcoin usually goes to where the most pain is inflicted on the market. And the most pain will be inflicted going a bit higher. And this will liquidate more people. As people now start shifting towards shorting, and I think shorting is not a bad idea, like I did it myself, $84,000 is a very realistic price target for us to be going next. And I don't want to hear in the comments that this guy is wrong, because that's what I'm saying. That is my word. If we go higher, then I'll admit I'm wrong. But for now, we're going according to strategy, okay? Now, next thing to talk about is Bitcoin, of course, in terms of seasonality. If we look here on the monthly, we know that Bitcoin usually, let me remove the RSI, goes down for 365 days during a bear market from the top to the bottom. It has always been 365 days. Here in the second cycle, it was a bit longer, 396 days. But that's basically the number one reason why I think we're going to continue to go down, as we have always had a bear market that has lasted for 12 months. And we are not there yet. Right now, in my opinion, we are simply at the top of the resistance, and we will have another leg down very soon. And also, if we look at Bitcoin here, and look at the last cycles, we can see that yes, first cycle we went down 91%, but we can ignore that one. That is the first cycle. Bitcoin was very volatile. Second cycle, 85% down, then 83% down, 76% down, and now 50% down. We can see that Bitcoin is becoming a more mature asset. It's going down less and less every single time. But I just want to show you guys so you can see what happened last time. I personally think we will go down further, like I already mentioned. And what I also want to note is that, well, Bitcoin is still in a downtrend. I mean, we are creating, look, a downtrend is classified as we have a high which is lower than the previous high. And right now, we have not gone above the previous high yet. As long as we close below the previous high, this is classified as a downtrend. It is also creating lower lows. So the low is lower than the low before that. in order for us to change trend and say that we're in a bull market now, we have to close above the previous high, which we clearly have not done yet. Okay, so we're still in a bear market. Next thing to mention is the liquidity heat map. It's very important right now because as Bitcoin goes up, a lot of people who are shorting are being liquidated, of course. And this is for mostly people who are using very high leverage. And therefore, in my opinion, I'm using between 5 to maximum 10x leverage. And I would not go above that to make sure that my liquidation price is at $97,000. And I'm almost certain that we are not going to go there. So that is why I opened a short position. I know guys usually don't open short positions. I always mention this in the video, but with low leverage at the right time, like we are right now, whereby we are literally at the top side of our resistance, it is not necessarily a bad idea, not meaning that you have to do it. But look, we have basically grabbed all of that liquidity here, starting from 80,000, and all these people are getting short, are getting liquidated, and we can see there's not much liquidity above us right now. We obviously still have a bit liquidity here. If I look up to like $82,000, and like I said, I think we're going to 84 potentially. I would not be surprised if we go there, but there's not much liquidity left above us, and we have a lot of liquidity forming below us. And I want to show this to you guys here also. If we look, so this chart is telling us the total liquidation map, okay? We can see all the liquidity prices at 100x leverage all the way down to 5x leverage. And of course, the 100x leverage are closer to the current price because there's a lot of leverage there. And what I'm trying to show you guys is, if I remove all of these lines, because I just want you to guys look at the cumulative liquidation leverage. And what we can see here is that there's a lot more longs who are going to be liquidated once the price goes down than people who are shorting who will get liquidated when the price goes above us. Okay, that is good news in my opinion. So the market usually follows the direction where most people get liquidated. And right now it looks like a lot of people are long, and therefore they will get liquidated if the price falls below the current price. Now, next thing I want to talk about is Bitcoin on the 50 weekly moving average. So if we look at Bitcoin here, and I put this is actually not the 50, this is I believe this is the 4-year. Yes, this is the 4-year. Let's talk about this first. This is the 4-year simply moving average line, okay? And this is just a good indicator that during a bear market, we usually touch this, or we go way below the 4-year simple moving average line, even up to the 7-year simple moving average line. And right now we have not touched this yet. Last bear market, we went clearly below the 4-year simple moving average line. We are not below that yet, and I'm strongly convicted that this is just a bull trap, and we are going to go further down. Now, next thing to talk about is, in my opinion, let's talk about the S&P 500 and the Nasdaq, and they're creating new all-time highs. Of course, we had good Q1 earnings results, and also looking at the S&P 500 here, we can see that we are really a bit overextended, and I would not be surprised if we see a correction coming soon. We can see that the relative strength index is downward sloping. We have a bearish divergence, and usually, price follows, of course, the RSI direction. And last thing to talk about is that the UK 30-year bonds are currently hitting 5.7%, which is the highest since 1988. Here, if we look back, we can see how high it is compared to history. 1988 was very high. And what does this mean? Well, 30-year bonds. So people are putting their money with the government for 30 years, and they're getting a fixed interest of 5.76% right now. Why are they demanding such high interest? Well, it's because inflation is very high. And if expectations of inflation are high, inflation means that the value of your money loses value, right? Because your purchasing power reduces and the money supply increases. And therefore, as people expect inflation to stay high, they say, if you want my money for 30 years, you need to give me at least 5.76% per year return. Because otherwise, they expect inflation to just eat away the purchasing power of their money. And that's it, really. I want you guys to stick to the strategy. Don't get FOMO'd in now to start buying. And I know it's difficult, and I know many of you will do it because I have done it in the past myself. You see the price going up, of course you buy. You think that you don't want to follow the crowd, okay? So essentially stick to the strategy. We're at crucial resistance. This is the time to be careful. This is the time to potentially sell or short. And I would personally not buy time to buy is of course at support. You always want to buy at bottom support levels and not at resistance levels. Stick to the strategy, guys. Hope you guys are safe. See you tomorrow. Bye.